And good evening. This is the Elliott wave update for the NASDAQ 100 for Tuesday, October 12th, 2021. And tonight I'm going to start again on the 4-hour chart. So before I go into the details of the hourly chart or even the nearer term or the shorter term time frame charts, I want to kind of begin here. So I'm going to give a little bit of background why I continue to favor the a larger decline and some pretty good acceleration to the downside is about ready to kick in. And this is why I feel that way. Again, I consider the 15,708 high as the all-time high that we're going to see for quite some time, like several years. And that level completed, I've only labeled it up to a primary 5, but I have a cycle wave 5 above that. So it's a red V, Roman numeral 5. And then above that, I have a super cycle wave 3 completing here. So on a super cycle level, we're into a super cycle level degree wave 4 correction. And that then now has to break down so that we can count it. And where I've actually broken it down to is back to that cycle level. So I'm looking for a cycle wave A to be put in place. And now I'm breaking that down to the primary level. And in the primary level, I'm still looking for a primary wave A. And now I've broken that down to the intermediate degree level, where I feel that this is forming a 5-wave structure down on an intermediate degree level to again begin to form the wave A's as we move up. So on a primary level, I'm still looking for that A wave. I'm still looking for either the first 5 down or an A wave in terms of the first 5 down on an intermediate degree. So now, according to Elliott, that often the corrective wave down, whether it's the initial leg, whether it's whatever leg it happens to be, if it's a downside move and you're looking for it to impulse, it often will find support in the price territory of one lesser degree. I'm counting an intermediate degree. So my forms of support on an intermediate degree level are going to be found within the minor degree corrective waves, particularly wave 4. Now, so that resulted then in labeling 1, and then we had a wave 2 rally. So found support, rally, but we need to follow our count. And the count is that we're looking at 5 waves down. We finish the first 5, that gets labeled wave 1. We go through an ABC rally phase, that gets labeled wave 2 on an intermediate degree. So now we're in the beginning stages of that 3rd wave. So wave 3 in its entirety should find support in the 4th wave of one lesser degree, which I have to come out over here because that one's already been met. This one doesn't fit the lesser degree anymore. So that puts me over to this corrective, an intermediate 4th wave, but it's a 4th wave of still one lesser degree because I'm counting a primary degree decline. So it should find support here. That brings me down to this number that I have tossed out now. This will be the 2nd time. There is where I'm looking for this 3rd wave to find support somewhere in this price territory that comes down to 12,915. And guess what was right there? The number that I presented yesterday as 12,945 as being the completion point for this 3rd wave. And it all fits. Even if I'm going to use this against this corrective wave, it still puts me right in line. So that zone actually could be 12,954 down to 45, down to 15. So that's a zone that could complete just the third wave. And that's using Elliott and Fibonacci relationships between the waves. Now, I'm coming back up. I'm going to drop this back down to the hourly chart. And now we're taking a look at what we're doing. It almost feels as if there is an intensive battle constantly between the market in terms of what it is doing. We have seen since, well, this would have been on October the 4th. So for a week, we have seen buyers move in and are rejected. Buyers move in and it's rejected. Buyers move in and it's rejected. Buyers move in, it's rejected. Buyers move in and it's rejected again. So I continue to feel that the structure is telling me down. And what the market isn't really connecting to is a particular reason to start changing positions, a particular reason to really just get out of a long, because all they're witnessing as traders is people coming back in, putting the money back into the market. Now, so until those buyers are depleted and filled, then I think this is the type of activity. But I continue to favor downside because each time the buyers are rejected, the buy side is rejected. And the market goes further than where it started in terms of the selling. So this buying, which began in Globex last night, started at 14,586. Well, it's now been rejected and we've come down and just drifted slightly below it. And now we're just rallying back up. So this continues to give confirmation that every time we buy, here again, it was totally rejected. This level was totally rejected immediately, actually. Immediately. Now, they followed up, racing it back up to the upside, but even that then was rejected as it was occurring. So this is why. And when I take it out, and this is why I call for the acceleration, because when again, I'll take it back out to the 4-hour chart, and you're going to see that we still have a lot of distance to cover between the getting down to here and where we are. And they're buying it up now. As if, you know, whatever the reason is, the buyers are still there. And I don't expect them to disappear entirely, but I do expect the balance not to constantly favor an up move. The balance will continue. There'll be buyers at different levels, but the sellers will just kind of fill them and keep going, fill them and keep going, fill them and keep going. And that's the activity I'm looking for. In lieu of that happening, I cannot right now disqualify or disregard the possibility that we are coming off and that this is going to be intermediate A, intermediate B. This ends up being an intermediate C, and I label it a primary A, which still then puts this in play, but not for a while. Okay, so if that's the case, and this is primary wave A, we're in a primary B wave. So ABC, A, intermediate A, ABC, B, if we can get it in there, doesn't look right, but it could. Maybe that comes in down to here, but it should not move below wave B, excuse me, where this wave, A wave would be labeled at 14,367. Then we're likely going to get a C wave, and that C wave has potential. Certainly has potential to get above 15,000 and then 15,100 and then likely 15,400. So we could go and equal the all-time high, possibly even put it in an irregular B wave, which would take us to new all-time highs and still be a corrective wave. And then what would the devastating downside that I'm looking for to create a lot of price damage is not been negated, it's been delayed. and it's been reassigned to a later time. We still have to get through earnings. And if earnings come out anywhere looking like, hey, we're good, they're not going to take the market down. They're going to rally it and they're going to start looking for new highs because renewed optimism has returned to Wall Street. It's all there. But now we're just going to play it, and we need to play it smart. So while I continue to look for this acceleration, if I don't get it, I cannot, in good faith, continue to say it's going to happen. I have to admit that, no, it's not. We're going to go up. Let's play it smart. All I attempt to do each day with these updates is to show where I think the potential for a larger move is going to exist. I continue to believe it'll be to the downside. We continue to witness it, that it's more to the downside, to the upside. But these upside moves have been fantastic in terms of trading. Even today, even though most of it happened during globex. So by the time we got online, it had already peaked. They attempted to bring it back up towards those highs, but then the failure started. And that was, so it was okay to play it up, but then it was like, no, recognize that we're going down. And because you got it on an hourly basis, we came back down and broke that 50. Then we broke the 20. Those are all producing the additional acceleration that we got into our opening. And then it kind of did get sloppy. They tried to rally it. You can see it was rejected. Then they got a solid bar in, but again, next bar over, rejected. So there was a lot of play in there. And this bar you bought, you worked it from the buy side, and it worked. And it was a good profitable day, I have to say. So even while we're waiting, when you're in there trading every day, yeah, you got to keep an open mind to the volatility being still strong on either side and not really care why. You just need to participate. So being with the downside in mind and the acceleration, that's fine, because when it does begin, you're going to be more anxious to jump it, to get on board and to ride it. And these are good money-making drops. This is an hourly chart. We can take it down again, and you can look at it on the 30-minute chart, and you can see these are good. Look at that 30-minute bar. Gee, you just had to get short at the opening and just kind of hang on. And then when you got your signal, you bought it, and then you just rode it. These were tradable. This was very tradable. It all was. In any case, we trade smart. Don't get in love with either one. So what I'm presenting is, yes, is a very bearish picture, but I come in every day and I need to trade. So therefore, I'm going to attempt to bear in mind what my bigger picture tells me and not get so thrown off when they decide they want to buy it. I want to participate. You make money no matter what direction it goes, because either you can be long the future or you can be short the future. What you don't want to do is fight it. What you don't want to do is get stuck in a position and get stubborn and let it blow you out. That can be problematic. So again, what I'm looking for tomorrow, I do believe if the move comes in, the bias will again be to the downside. The acceleration will again be to the downside. So therefore, if that does not happen and we start to break above our moving averages again, use them properly. Right now, they're lined up to go down. That's a 30-minute chart lined up to go down. And you just follow it. Again, I trade on the short-term charts right here. And you can look at that. Even here, I can use my Elliott. It's an ABC up so far. So how high can it get? You can run numbers. You can do the Fibonacci. You can do very near-term Fibonacci, 5-minute chart. Figure it out. You might be going to get, maybe you get a chance to get up to 4610, 14,610. And if it gets up there, falters and starts to break below these moving averages again, which will walk it up. Maybe we get to the 20. If it can't break the 20, then look for it to turn lower, et cetera, et cetera. I'm going to end it there and say, let's continue to trade smart. Let's continue to participate in these moves. They are very profitable. And the next update will be tomorrow.